the question I had for you, again, goes to these magnitude issues. The number you quoted in your testimony was that 70 to 80% of those mortgages that are in foreclosure show evidence of fraud. I think this is from the Mary folks. Does that mean the foreclosure process is fraudulent, or does that mean that somewhere in the chain, from origination all the way through, there was some evidence of fraud?
What we found is that somewhere in the chain, and the number was quoted by Mari because what they're talking about is either fraud for profit or fraud for housing. And again, you're talking about two different animals. Somebody might fudge the numbers to get into a property that they really can't afford. So that, in essence, is a fraud. However, it's not something that we are really going after. We're going after the fraud for profit and the criminal conspiracies that are involved in that.
I see. Okay, thank you. That's all right.
Well, let me, on my time, ask just a follow-up to this, which is, let me understand it. The 70 to 80% number does include both the fraud for profit, the conspiracy for profit, as well as the fraudulent documentation.
That's correct. But what's happened is the fraud for property has actually hurt the market and hurt the economy as well, because now you're looking at all the foreclosures that have occurred because of that.
Well, this is both for the staff, and then if y'all can help us at all, thinking about something quite close to what he was thinking about. I look at this at the universe of foreclosures that we have, and there's always there's sort of a baseline level of foreclosures that naturally occurs in normal times, and then obviously we clearly saw a dramatic increase and are seeing a dramatic increase in foreclosures. I'm interested in both the components of the baseline level of foreclosures and the increase in foreclosures. And if you look at those people, I, in my simplistic way, divide them up into 4 groups of people. The first group are victims, people who were suckered by some bad lender, mortgage broker, someone who fooled them into taking a mortgage that they never should have taken. Right? These are people we clearly feel sorry for, especially on the back end now when their property is being foreclosed on, they're being hit in all sorts of ways. The second are knowing but unlucky people, people who understood that they were taking a risk. They basically understood what they were doing. They wanted to get into the home. The mortgage was available to them. They knew they were taking a risk, and the economy tanked, or they lost their job, or whatever happened, and so they're about to lose their home. The third are gamblers, people who were knowing and were intentionally speculating on home prices continuing to appreciate. Maybe there were more of those in certain areas of the country than others, I don't really know. And then the fourth category are the fraudulent individuals, the people who were doing the fraud from the borrower side rather than the fraudulent behavior on the lender side. These were people who were lying in terms of the information they were providing. I'm trying to think about it from the standpoint not of the universe of mortgages that were out there, but if you look at a universe of 100 people who are facing foreclosure, kind of what's the breakdown? Because if this is 80% victims, that says one very significant thing about how we should be thinking about the foreclosures. If it's 80% knowing people, what can you tell us about what you see and how that might influence our understanding of the relative components of the universe of people with who face foreclosure? Mr. Theobald, anything? Sorry if it's too complex of a question. It's
quite all right.
Can I add 2 more categories? No, just kidding. No. It's actually a very good question.
It is a very good question. And what we have seen, the different scams that are involved with the foreclosures, folks that were knowing got into these properties, knowing that they couldn't afford them in the first place, however they fudged the numbers to get into them. Now you put them in one of your other categories as opposed to being a fraudster. Technically, they did commit fraud because they gave false information on their application.
Yeah, I have that person in category 4, where if they're being foreclosed on, I have no sympathy for them because they lied in getting their mortgage.
Right. But what had happened is the phenomenon of the artificial increase in the property valuations. And folks got into properties and paid far too much money than what they were actually worth. And then when the bubble burst and all those properties went down to what they were actually worth, folks are holding $500,000 mortgages on a $200,000 property. Their best move is to go into foreclosure. not to pay that $500,000. Now, that's bringing us to the next wave of fraud, because now they're identifying a party to sell that short sale to at the lower rate and then quit claiming the property back over. So in essence, stealing $300,000 from the lender.
Okay, so let me just focus then, in the universe of fraud that you're dealing with, to what's the relative balance of fraudulent lenders? I'm thinking of these as firms that are using these deceptive advertising practices and basically fooling borrowers, versus individuals who are trying to take advantage of either other individuals or of the lenders.
Right, and there are a number of folks that are part of the industry that work in different various aspects of the mortgage industry that have been involved in this, maybe knowing or unknowingly by the lending institution. And those people are the ones that probably caused the most damage, because they were able to approve or allow those fraudulent loans to go through. So what we have seen is it's a myriad of folks that are involved in this, whether it's folks that are real estate agents, mortgage brokers, appraisers. Everyone involved in the process had something to do with it. Title attorneys, closing agents, everyone that's involved in there.
Okay, but all of those people are, in my simple model, they're on the industry side.
Correct.
It's bad behavior by people in the industry, rather than the guy who wants to get into the $500,000 house, and so he fudges the numbers. He's looking to live in it. It sounds like you're saying that universe of individuals who are lying to get into homes is a small proportion of the total amount of fraud. Is that?
Commissioner,
That
4
is,
minutes?
1 minute, that's all I need.
that is actually a significant portion, because of the market and what had happened to the market. Because the market went artificially inflated, where folks couldn't even afford to live in Florida anymore, due to the increase in taxes, due to the increase in insurance. So they had to fudge the numbers in order to get a mortgage to be able to get that property.
All right, so to repeat it back to make sure I understand it, in Florida in particular, there were in fact a significant number of individuals who were not affiliated with this industry, who were in a position that they felt they had to behave fraudulently because it was the only way they could get into a home.
Exactly. There was nothing else that had increased the valuation of the properties. We didn't have an increase in industry, jobs, high-paying jobs, salaries that went up. It's just that the speculation on the properties and the condominiums and single-family homes went up, and to a point where folks could not afford to live, so they had to do something in order to get into a property. And that's where you saw the option arms and the subprimes and everything else, and the numbers.
So the housing price bubble encouraged bad behavior by some people who wanted to own.
It exacerbated the problem.
That's surprising. Thanks.
And just one remaining question. Mr. Theobald,
Take a couple minutes.
could you talk a little bit about perhaps anything that is lingering that you might be seeing, since you are on the front line? You've obviously done a terrific job of being able to pull together your task force for mortgage fraud, and all of you have identified the fact that there were some early warning signs about the problems inherent in that. I'm wondering if there's anything that you're seeing today that continues to concern you as we look at our financial system going forward.
Actually, there are a lot of concerns, and one of most particular concerns is the state and local folks working with our federal partners. Pushing the work down to the state and locals is the only way that we're really going to get on top of this mortgage fraud. There's far too many cases to handle for the FBI or HUD Inspector General themselves. They have to push this down, and in order for us to move forward, we need training for local law enforcement. We need to do these things, and we are accomplishing that through the Department of Justice and Bureau of Justice Assistance by pushing down the training. But as far as trends that we're seeing right now, we are seeing a lot of loan modification fraud, and that is coming from businesses that are opening up shop, and these are people that are behind on their mortgages, and they can ill afford to pay $1,500 or $2,000 to hire someone to help them modify their loan, and all they're doing is taking that money and doing nothing. So that's the next wave that we're seeing, the short sale frauds, which I described before, as far as folks that got into their property back when they paid too much for the property and now are trying to unload it at a short sale price, but then sign it over and quit claim it over to a friend or a relative and then have it back again.
Great. Thank you.
Mr. Theobald, as someone who was born in and still lives in Miami-Dade County, I was particularly interested in your commentary and would look forward to discussing this with you privately further. The legislation that was passed states that a person, law enforcement official, who comes into contact with some fraudulent activity is to report that to the county property appraiser's office. Do you know how many cases of fraud were in fact reported to the county property appraiser's office?
Yes, Senator, and if I could for a second, and I don't know if you remember, but 16 years ago you were doing jump outs with me in one of the roughest neighborhoods in Miami-Dade. And this is a lot more.
Thank you for covering my back.
Yes, sir. But so far to date, we've delivered over 100 cases to our property appraiser's office. And the significance of that is with the fraud that occurs in neighborhoods, the fraudsters were having to have two comparables in a particular neighborhood. And those two comparables raise the valuation of the properties in that entire grid that the property appraiser uses. So all the other folks that were not involved in the fraud, their taxes went up because their homes were artificially inflated by the fraudsters. And especially in condominiums in Miami-Dade County, and you know better than anyone down in the corridor just south of the city of Miami, in the Brickell Avenue corridor, there are 25%, 30% foreclosures in buildings in that neighborhood and attributed from these fraudsters.
This is to all the panels. Many of the people who are involved in these activities are licensed professionals, realtors in most states, mortgage brokers are required to have a state license, etc. How effective have the professional regulatory agencies been in effectively prosecuting cases of license removal or other form of sanction against these professionals?
In Florida, the statute was on the books to have these hearings. However, the personnel that is assigned to these regulatory agencies is very minimal at best, and they don't have the resources or the personnel to do it. However, since the heightened awareness and the mortgage fraud crisis that we've had in the state of Florida, the increase in the licensure removals and suspensions has increased because we are now constantly communicating with those agencies, and they are having these hearings now to pull folks' licenses and, again, prevent them from victimizing other people.